Buying investment properties just got 10 times easier due to this one loan program that I have, and I'm going to tell you all about it because it only cares about one thing and one thing only, and that's cash flow. What's going on, everybody? It's your next lender, Aaron Page, and today I want to tell you about our DSCR loan program, and DSCR stands for Debt Service Coverage Ratio. So what this program is it's built for investors, whether you're a brand new first-time investor or you're a seasoned investor and you already have a portfolio of 100 properties. This loan can still be a major asset and tool for you to use in your portfolio. The DSCR loan, or Debt Service Coverage Ratio, only cares about one thing. It cares about a 1-to-1 offset of rents to the mortgage payment. With this program, there's no income verification. There's barely any asset verification, which is just simply showing that you have the down payment, which can start as low as 15%. And that's it. We don't care about anything else. We're not verifying assets. You may have to show reserves depending on how many properties you own. We have to show that you're good for those types of things. So some additional assets may be required, but we're not digging into your bank statements. We're not verifying any income, and we're looking to see if we can get a 1-to-1 ratio of rents to offset the mortgage payment or the proposed payment. So what this means is we're going to talk high numbers, and it just because it makes it easy when I'm explaining it. But let's say the monthly mortgage payment is $1,000. Okay. You have a single family rental. I don't know where you're going to find one for $1,000 a month, but let's just say you did $1,000 a month mortgage payment. We will do a rent schedule on an appraisal, and that appraiser will come out there and he will say, okay, yeah, property's in good shape. Here's the value. Also, the market rents for the area that this property is in would demand X amount of dollars per month. So let's say that's also $1,000. $1,000 mortgage payment, $1,000 rent, 1-to-1 offset. That's what we're looking for. You can go below a 1-to-1 offset. You actually could go down as low as a 0.75, and I even have some lenders that will let you go down even lower than that, on exception, of course, and you have to have an incredible profile for that exception to be granted. But you're looking to see as close as you can get to 1. That's what you want, because your interest rate is better, your terms are more favorable. Everything about it is better if you have a 1-to-1 or better. The process for this loan looks like this. You come to me, you get pre-approved, we look at your profile, and I say, hey, you can go up to X amount of dollars as long as you have the down payment essentially and the reserves to cover what your profile calls for. Once you go out and identify your property, you go under contract and you bring it to me. Side note, this is also eligible for refinances and cash out. So if you already own a property, you don't have to worry about finding it because you already own it. You can just come to me and do a cash out or a rate and term refinance and have very limited documentation for that to happen. But I digress on that part. Let's say you're buying a brand new property as a purchase. You've identified it, you come back to me, we already have your application, you're pre-approved, it's accepted, now we're ready to start the paperwork. This is the process. We send you your disclosures. We make an estimate of what we think it's going to rent for based on what the market calls for. You sign the disclosures and we order your appraisal. On that appraisal, we're going to order what's called a rent schedule, which is called a 1007 rent schedule. So the appraiser will go out to the property, inspect it, give us a value, give us our as-is condition appraisal, or he'll call out any repairs that are needed. But the appraiser, he or she, will also complete a rent schedule saying this home in this market, in this neighborhood, would rent for X amount of dollars. He'll also look at other rentals in the area to compare it to make sure that this home isn't renting for $1,500 while all the rest are renting for $600. It has to be comparable to what the area calls for. Once the rents are established on the rent schedule, we compare it with the mortgage payment and we see what our offset is. If we have a 1-to-1, it's good to go. If you have a 1.25, meaning you rent for 1.25% of what the mortgage payment is, you're going to get an even more favorable interest rate. The flip side to that, let's say it's 0.75 to 1, where it would rent for less than the mortgage payment. Your terms are going to be a little bit worse. It's just simply the risk involved with the loan. I'm sure everyone understands that. It's the way the mortgage world works. Now, let's get back to sunshine and rainbows. Everything's 1-to-1. Rent schedule's good. Mortgage payment's good. We get our clear to close. You sign off, close, you own an investment property. Now, I know that sounds way too easy and way too simple, but that's the beautiful part of this program. It really is that. In the last 3 years, I've closed over 40 DSCR loans for investors around the country. So I do feel like I know a thing or two on how these work. And I can tell you, no income verification. If you have above a 740 credit score, you're going to get the best of the best. With assets, we check for reserves and to make sure you have your down payment, and that's it. We don't do anything else. The only thing that would be required would be if you are an investor and you own 25 properties, we have to document the taxes and the insurance and the debts to those properties. So on your credit, we're not looking for truck payments, car payments. We're not making sure you fit under a debt to income ratio. All we're doing is documenting the taxes and the insurance on that property, and that's it. But again, your debt to income doesn't matter because there's no income that we're verifying, but we do get that as proof for your other properties owned. So to wrap all this up, if you're an investor looking to buy your first investment home or your 100th investment home, this is definitely an opportunity that you should look into to see if it can fit into your portfolio. The DSCR loan could be your window to more opportunity when it comes to investing. And I know I've said it before, but remember, it's important. This loan does not care about your income. It does not care about your assets outside of your down payment reserves. It cares about your credit score, so the higher the better. But the main thing it cares about, cash flow. Cash flow is king in real estate, and the DSCR loan provides it, and it is the king of lending for investors. You can use it for buying new properties, refinancing, cash out refinances to then use that cash to buy more properties on DSCR. It really is the king. The flexibility is unbeatable. You can use it for single family homes, duplexes, triplexes, fourplexes, up to 29 units if you find townhomes in a bunch, or if you find a small apartment complex. It doesn't matter. Up to 29 units, you're able to use a DSCR loan. The final sign off, you can hold the title to this and close it into an LLC or an S Corp. It never even has to touch your personal credit. If you're ready to take your real estate game to the next level, send me a message. My number is in my bio. It's also linked down below, as well as my email address. Reach out. Let's get in touch. And remember, DSCR is king. I'm your next lender, Aaron Page, and I look forward to helping you on all of your future investment purchases.